All right, let's do an ELF update here on the 7th. So the move down here, same as yesterday, came all the way down to 63 bucks. It bounced all the way up here to 73 bucks. I would say that it's very likely that that was a fourth wave right here. If we go to the 1 minute time frame, this is what you have to do sometimes. You have to go down to the 1 minute time frame to figure out what is going to happen. And we see here, and this is something that I didn't really look before earnings, but it would have been obvious if I did look. Move down here, we chop. We come up here into earnings. We do not break the high. That is definitely not an impulse. It's a corrective move after an impulse down. And then sure enough, we get a third wave down. And so this is likely a fourth wave. So 3, and then this right here, let's see where the 1.61 fib is. Let's see where the parallel line goes. Basically right up there. And you can see that it's kind of sideways. I would imagine that this is a fourth wave. We're too close to this demand zone down here for that to be it. And so I think that you're probably going to see one more low down here to this box, 48 to 58 bucks, and then that should 100% be it. I went through all of this last night, and third wave is right here. So that was wave 4. 1, 2, 3, 4, and then you get this huge move down here. And this is just an extension right here. So you have 1, 2, 3, 4, and then you get 1, 2, 3, A, B, C, 4. All right, right here's 4. Mess that up. 4 is right here. 1, 2, 3, 4. 1, 2, 3, 4. Should be getting one more move down to a new low, and then you have the weekly demand down there at 58 bucks. So I think that this can still go down. I sold all my puts, bought back my covered calls, resold some new covered calls, and also took that premium to buy a few more puts. I still have my sold puts as well. I sold them at 80 bucks for 221. So that covers like all the money I spent on the puts. You got to be hedging in this market. The hedges saved me a lot of money, where I was down on my position like 8 grand, but my hedges made me like 4 grand. So if I wouldn't have done that, I would have been down way more. And so overall, let's just go over the overall chart then. This should be wave A. If this is wave A, a normal wave B at least retraces to the 0.5 fib. So we go down here to 53 bucks. You're looking at a minimum of 136 on a retrace. But we know that there are gaps right here. There's a gap at, is there a gap at 100? Maybe there's not a gap there. No, there's a gap there. Gap at 100. Now the gap here from earnings at 86. And there's a gap all the way up here at 167 and also 180. Call me crazy, but I think that there's a very good chance that these fill within the next year. Because this is wave A, and this would only have to retrace, again, to a little bit past the 0.61 fib. So it's possible it doesn't too, but I think that 136 is the minimum target. Hopefully everybody that's been watching this video has a lower average than 136. My average is 90. So no matter how bad it looks right now, you got to put it in perspective. $90 average, I'm down what am I down, like 25%? And I'm not even that worried, because this should definitely be bouncing out of here, and it should be the end of 5 waves. You can see 5 waves. 1, 2, 3, 4, 1, 2, 3, 4, 5. So there you go. Let's just take the, I've been using the regular chart. Let's take the log chart now. And let's see, there's a gap right here at 43, and there's a gap at 22. Let's say it ends up going to the farthest gap. In that case, even in that case, I would still be looking for a retrace up here to 95 bucks. And that would be like the minimum retrace. So my position would still be up. You can still buy here if you want and add to your position. I might at 58, haven't decided yet. I'd probably put some in there. And then I'd probably stop out if it went below here. But basically, this is what I do with pretty much every stock. I'm hedging if I'm wrong. And sometimes I'll trade against my position. And that's what you got to be good at in this market, because they're going to scam you. They're going to scam you a lot in this market. And so you have to like look at your deltas, figure out how much you're going to lose if you're wrong. It's not just about technical analysis and being like trying to get everything right, because you're not going to be right all the time. So that's my thoughts on ELF. Probably coming down here to 58 or 48 bucks, and then bouncing all the way back to 170. But at minimum of 136. And if they really want to be, if something happens with the company, I still think it gets back to 95 bucks. So that's it for this video. I'm going to do a market update here in a bit, but I wanted to go over ELF one more time.